Hi there, traders. This is Brad Gilbert with the daily market wrap and what's ahead for Tuesday, the 22nd of June. All right, as we come out of that North American session for Monday, just having a look at the markets. The equity markets, well, it bounced a little bit back, right, following Friday's weekend close. So that's just regaining some sort of faith in the market. It's one of those things, and we're sort of in the hangover sort of period of the following the Fed meeting. Right, you got the big dollar move, sort of just dribbles back. There's no support and resistance around on a lot of pairs. And I'll show you the rest of the majors in a second. But what you get is a situation where it's gone so far that the market now starts to try and pick tops and feel out the bottom in equities, in the currencies and other instruments. So we're sort of in that phase, right? But we are going to be gearing up towards additional movements as the US numbers roll out, as the Fed Chairman Powell testifies, etc. So what do we got at the moment? Well, let me just give you a look at the charts. It's probably a little bit easier to describe. So you've got the initial moves here across the board. This is a big flush out. The market's basically positioning itself for dollar strength, for the medium term, not just sort of this last couple of days. And what we're really looking for is a follow-up in the macroeconomic fundamentals of the US. If they continue to be strong, and we're talking second tier data, like today, we've got existing home sales and we've got a bunch of numbers this week. If they come out strong, well, then the dollar will start to just slowly keep moving to the top side. But what we've got is a situation where it's like a bit of a hangover. Like you just get the market rolling over a bit, sort of flushing out a few weak positions. And if you have a look here, even just on the dollar index and dollar Swiss, right, there's a big gap here. I mean, a big gap between where the current market and where sort of support sits, right? So that's a long way for the market to sort of sit in there and sort of hold positions. So what you get is you get this sort of little bit of a feeling out process. Now, dollar yen, no surprise, it's just sort of doing its own thing. Pretty hard to work out what's going on. Overall, it's going up, but in pretty loose sort of fashion. Once again, dollar CAD finding support around 123.50, and really support isn't back to 122.50. Right, 100 points. And that's pretty much the same across a lot of these pairs. So the million-dollar question is, okay, how far of a retracement do we look to get back into the dollar trade? Okay, the dollar long trade. And if you have a look at all these pairs, all those little blue lines I've just drawn, that's the distance, right? And it's pretty much 100 points across the board for all pairs as to how far they can basically retrace and still stay within this current move. Well, I think the answer for a lot of these pairs, and today I'll show you what we're sort of expecting for today, the next 24 hours. We've got very little data coming out. So this is a chance where the market can even come back a little bit further. It would be nice to either, like for instance, if we had some like slightly weaker US numbers, we could get that move higher. If it doesn't happen, well, then it just, this retracement just peters out. So, but looking at, let me just zoom into euro. It's a little bit easier to focus on one pair. Now, where are the retracements potentially going to come? Well, you can sort of see the price action on the way down. See where it's had a couple of levels of sort of congestion. These are the levels that you find end up sort of being like sort of pseudo support and resistance. In this case, resistance. You can see here, we've had a bunch of highs, got down to 119.20, did a fair bit of work there, stalled, and it's been lower. We've now sort of got a bit of a pseudo resistance level here around 119.20. Now, for me, that's good, but depending on your risk appetite and what you're looking for, this isn't a bad level to be getting short euro for sure. If anything, this level up here, closer to 120, the figure, I think that's where the big money's going to be, right? Because it's getting back closer towards resistance. You've been very patient. You wait. I mean, it's been down to 118.5. I just can't see it getting back to 120, the figure, without weak US numbers. But that would be, I'd say, the maximum retracement level. This level here has got to be, almost potentially where you start sort of staggering your entry trades to get short euro against the dollar. Now, before you run in, right, that gives you an idea of where those retracements are. And with those retracements, like putting your risk management into play, you need to be able to apportion your risk according to where your stop out is, your stop level is. So make sure you work that out thoroughly if you are going with staggering positions, smaller trade size, bigger stop on the initial entry. And then the next entry is like a slightly smaller stop, and the last entry probably a very small stop. But you get the idea. There's a video I put on their website on the Trades for Traders site last Thursday, Friday, about staggering entries. May help you explain. That's in the Forex vault if you want to look that up. Now, so what we've got to do is with these pairs, right? So we've got direction on pretty much everything except for dollar yen, right? So now we're coming back to normal market conditions where you're like, okay, so which pair do I hit? Because they've all in this retracement sort of phase. Well, you come back and have a look through the macroeconomic fundamentals, right? And then you can actually sort of work it out where the focus is going to be. Now, the existing home sales, I mean, there's nothing else coming out, right, substantially. We've got actually consumer confidence numbers there out of, let me just clear the screen, out of the Euro zone. That's probably worth a look as well. These two things, so Euro is going to be in play. We've got the dollar, we've got a Euro number. Okay, so that sort of makes it very easy to work out which pair is going to move. But seeing that we've got the US existing home sales coming out, right, that sort of puts all the majors back in the spotlight again, right? And then as you work through the week, right, well, that's actually not the only thing that's happening today. So you come back down here, check out the what's going on with the Fed. So late in the day on Tuesday, we've got Jerome Powell testifying before the US House of Reps. Okay, now you can go and find out what's going on. So the Fed with these meetings, so this is probably going to be the key event for Tuesday, right? And you're thinking, okay, well, what's this all about? Well, he's just going to go in and tell them what's going on with the various currencies and these sorts of things. One of the other reasons why I think the dollar may have just rolled over a little bit, if you go into this story here about the Fed policy sustained improvement in economy, this is like an early prepared testimony for Congress. You come down here and he's like, okay, in his remarks, which were released by the Fed late Monday afternoon, Powell said he regards the current jump in inflation, in fact, as likely to fade. Now, they've been saying that for some time. They have changed their forward guidance. That's why I've got this dollar strength, but they're still hanging on to the potential for inflation to like drop very quickly, right? So they're still hanging on to that a little bit. And then he also restated his concern that the recovery remained uneven, with jobless still hitting lower wage workers, blacks and Hispanics the hardest. So there's a couple of like little tweaks in here that they are still clutching on with straws at this point. And that's enough just to sort of take the edge off the dollar a bit. He's not talking about, oh my God, we've changed our forward guidance. We're going to be looking at higher rates. No, not yet. They've changed it to go with the data, but we're looking for follow-up. So they are still hanging on for the chance to basically go back into a neutral phase. That's going to be quite interesting as we go forward. I think that's one of the reasons why the US dollar, right, I've got the dollar index down here, it has just rolled over a little bit, right? That's, if you're a long dollars, you don't want to hear him talking about, inflation's going to fade and all this sort of stuff. But the trend is in play. The dollar's going up. We've got support miles away, back at 91, the figure on the dollar index. So you've just got to be careful. This is I would call the twilight zone, where we've got the move. Support and resistance is way back lower, and we're now sort of sitting around waiting for the next level of momentum. One other thing I wanted to mention actually is, in this situation, it's a good time to go and redraw, like for the pairs going up, your support lines, obviously your resistance lines as well. There's usually not many once it's had these big moves. But one thing that you actually often get, and this is where you sort of get, like, it's like this fanning motion. Like you've got multiple trend lines, resistance trend lines. Okay. You should have quite like at least a couple on most pairs where they've broken down. We've got the new resistance lines forming here. And so as these currencies come back, and this is one of the things to understand with trends, not so many on the major dollar pairs, dollar CAD's got a few. So as it comes back to these levels, it finds it hard to rally because you've got multiple levels to get through before it sort of goes back to the top side. So This is one defining thing with medium-term, short-term that become medium-term trends and longer-term trends is you get all these levels on the top side if a currency is going down, and it makes it even harder for the currency to come back. This decision by the Fed is a policy decision. It's bigger than just one data release. So at this stage, you've got to start factoring in and thinking through the process, dollars going up, where can I get in? Where are the retracements? And then start to work it there. From there, back towards the macro data, what's coming out, where's that momentum going to come from and when's it going to happen? You can find that through the time and the release of these events. And that's where you piece it all together. All right, guys, that's it for me for the moment. I'd expect a pretty quiet Asian day, probably a pretty quiet European session as well, barring any left field events. And we'll see how the things pan out once Jerome Powell has had his testimony. All right, guys, have a good one. All the very best. Cheerio.